Hi there, this is a routine weekly traffic light update for the week of ended on November 18th. Prior to going into the detail of the presentation, here are the disclaimers. Traffic light and capital appreciation point are the results of a proprietary risk analysis model and should be used as a part of your due diligence process. Crystal Clear Indicator is not a licensed financial advisor. Investing involves risk. Here's the typical agenda. We'll review the traffic light on S&P 500, Dow Jones, on NASDAQ Composite. We'll be looking for bearish and bullish trades. Here's the traffic light S&P 500 long-term indicator. For this week, I decided to show only the period of the last 10 years rather than the typical 20 years for more clarity. The long-term indicator has shown less risk because the light turned to yellow from orange. Monitoring still required, as we showed in the previous episodes in 2000, the breach of the red line right here, the breach before it became a conservative point, took several tries. In the 2012 period, as the index attempted to make a new high, breaking this high resistance over here, they will pull back, minor pullback, and each pullback is less than the one before to keep the breakout intact. Let's observe if a similar trade will happen in this area. The chart might look similar in 2012 period, but the fundamental is slightly different. Back then, the PE ratio was about 14 to 15, that's relatively low. But here, the PE is about 25. So, from that perspective, the gain may not be as much as in the 2012 period. Let's look at the traffic light Dow, an intermediate indicator. This indicator has a good history showing intermediate bullish and bearish signals, especially when the bullish line and the bearish green line cross over and showing divergence. In 2010 area, as the red line making a new high, the market ascends, correlates. In 2011 area, when the red line is descending while the index is ascending, it's showing a divergence. Eventually, it leads to market had a correction. At the macro level, in September, we can see the red line made a new high relatively in May of 2015. Though the red line has been descending, it has bounced off from the long-term support area. And this bounce is confirmed by this week. I will zoom in the graph in the next few slides. Here's the current status. It is very clear that after the election, blue chips stocks are more favored as the Dow made a new high. But there's some bearish trades in this graph. I'll go over them with you. First of all is potential bearish divergence. As the index makes a new high, the bullish line is not making a new high. And the bullish line was descending on former lower low, and bearish line is ascending. Here are two bullish views on traffic light Dow. There's a W bottom, and the green line is ascending, and the red line, as the arrow points out, is the bullishness is intact. We can see the similar things in traffic light NASDAQ. It was in 2010, it was making higher high. In 2011, it was had a bearish divergence, and now there was a bullish crossover recently, and the red line just made a new high. So those are some, I'll say, bullish signs in traffic light NASDAQ. Before going to the bullish trades analysis, let's see if there are any bearish trades on NASDAQ Composite. Potentially, there could be a continuous bearish divergence. And the bearish line has been reach a higher low relative to April. And there was bearish crossover. And now let's, in the next slide, I'll talk about the bullish trades. As NASDAQ making a new high, the red line is also making a new high. That's a positive confirmation. Plus, there was bullish crossover on November 14th on Monday. This information was posted right away on the website. And the green line is descending and I'll say concave down. That's also a positive, a bullish sign as well. In summaries, traffic light S&P 500 is in yellow. Traffic light Dow and NASDAQ shows more bullish and less bearish signs. And expect pullback as indices attempting to reach or staying a new high. The unsynchronized bullishness could limit again as unsynchronized bearish limited the downside in the last 2 weeks. Thank you for listening.